In this review exercise, we are going to look at what happens when a company decides to discontinue a certain segment or division of their business. And we're going to look at kind of the lower portion of the income statement. When we're doing something with discontinued operations, the discontinued section of your income statement always happens after your income from continuing operations. The reason for that is we want to segregate for anyone that's using our financial information to make decisions about our business, to be able to clearly identify what revenues and expenses will be continuing with us in the future in order for them to be able to help predict future earnings. And what are things that are going to be leaving us basically at the end of this one fiscal year. So in this example, in review exercise 5.5, they tell us that our corporation has reported the following after-tax information for its current fiscal year. It's important to note that it's after tax, so they're giving you the after-tax amounts. No matter what, everything with your discontinued operations has to be shown net of taxes. Reason for that is because this section comes after you've already calculated income taxes on your normal operating income. So this is happening afterwards. We still have to show that tax impact that's going to happen for those discontinued items. So they tell us that there was $35,000 in income from continuing operations, $8,400 of income from operations of our discontinued line C. So line C did actually operate at an income during the period. But there was a $12,500 loss on disposing of line C. So whether that means we sold it or just got rid of it and there were some assets that we lost out on value, whatever the case may be, we do have a loss. So we're going to start with our income from continuing operations and prepare that lower portion of our income statement. So we have our income from continuing operations, and that was at $35,000. Now we have our results from discontinued operations. And again, the reason why we're segregating this out so that the reader of our financial information really has a clear picture of what's going to be continuing forward with us. So we have our income from our operations of discontinued line C, and again, it's net of tax, they told us. And so they earned a net of tax amount of $8,400. But then we also have a loss on the disposal of this line that we have, net of tax, and this is a tax credit, so we don't have to take as big of an impact of the total loss of $12,500. So we're going to net those values together to see what the impact of discontinuing line C is going to be on our net income for this year. But again, remember, if I was an investor, what I'd be looking at to help predict future earnings and future income would be that income from continuing operations, because that $4,100 impact that's negative to us in this case from line C won't be there in the future periods. So our net income at the end of this current fiscal year would be at $30,900.